Who's excited to bring the highs and lows of securities trading on chain?
Soon after. The next day.
Today, I'm talking about a regulated exchange that's going to bring the cash and the crash of stock market and real estate trading to crypto. Watch this video until the very end to protect your investments. Let's get it. I'm not a financial advisor. Welcome to the channel. I'm your host, the Bid Boy. If you want to learn more about crypto and how to play the crypto markets, put yourself and your family in a better financial position, make sure to subscribe to the channel and hit the like button if you find value in this video, and I'm pretty sure you're going to. Today, I want to check out a really interesting project, LCX, or the Liechtenstein Crypto Assets Exchange. It's a blockchain ecosystem that aims to bridge the gap between traditional financial markets and the digital asset world. It's a regulated platform offering a range of services related to cryptocurrencies. The World Economic Forum website calls LCX a blockchain bank for the new financial world. LCX's goal is to become one of the world's first licensed and supervised blockchain banks, seamlessly blending traditional and crypto assets. LCX is focused on helping both traditional and blockchain market participants make the most of opportunities arising from the growth of cryptocurrencies and tokenized assets. The exchange secured a total of 8 licenses in the Token and Trusted Technology Service Provider Act, which makes it one of the first cryptocurrency platforms to be regulated in Liechtenstein. But before we talk about its LCX token and focus on RWAs now, let's talk about where this platform is headquartered and why. LCX is centered in, you guessed it, Liechtenstein. Well, if you knew that was a country. But if you didn't know, it is a small landlocked country located in Central Europe. There are some benefits of operating a business there, especially for crypto enjoyers. You see, because Liechtenstein is known for its favorable tax environment, which extends to business operating in the cryptocurrency space. These benefits include low corporate income tax and no capital gains tax, which means that profits from the sale of cryptocurrencies or other assets may not be subject to additional taxation beyond the standard corporate income tax. But it goes beyond that. Liechtenstein has favorable tax treatment for token sales. Let me explain. The tax treatment of token sales, such as initial coin offerings or ICOs, can be complex and varies across jurisdictions. Just look at what's happening now in the United States, where the SEC is on a retroactive witch hunt for tokens that were launched years ago through ICO, including the blockchain for which I serve as your sultan. That's Solana, of course. Unlike the US, Liechtenstein has been proactive in developing clear guidelines for the taxation of token sales, which provides investors with more legal certainty and can even potentially reduce the tax burden for businesses engaging in such activities. In Liechtenstein, there are tax benefits for holding company. The country has a favorable tax regime and its network of double taxation treaties, and LCX may be able to leverage these advantages through its corporate structure to minimize its overall tax liability. Going a step further, Liechtenstein has actively positioned itself as a blockchain-friendly jurisdiction like Estonia, and it's introduced various incentives to attract businesses in the sector. These incentives may include tax breaks or other benefits for companies like LCX that are actively involved in the blockchain and cryptocurrency space. Imagine a country that is actually pro-innovation and wants new businesses to win. But back to LCX itself. Let's talk about the LCX token first, then get to what the exchange wants to do for RWAs. The platform's native utility token is called LCX, and its purpose is to offer various benefits to holders, such as reduced trading fees on the exchange and access to exclusive features. The Coinbase website says the LCX token can be used to sign, encrypt, and secure digital assets on the blockchain, potentially making it a participant in the future of tokenization. LCX also offers a tokenized bond offering, LCX Earn, which is a crypto-denominated tokenized bond endorsed by regulators. They say that this represents a new asset class, merging the benefits of blockchain technology with the stability of traditional financial instruments. The LCX token launched in March of 2019 and has a 1 billion total supply. Tokens are allocated to various groups, including the team, advisors, early investors, community sales, and the company reserve, with vesting schedules meant to ensure long-term commitment and stability. And a portion of the trading fees collected on the LCX exchange have been promised to be used to buy back LCX tokens from the market and burn them, reducing the overall token supply and potentially increasing the value of the remaining assets. And now let's get into the most interesting thing about the LCX exchange, and that's its focus on security tokens. We've seen our share of crypto exchanges, but LCX is different because it's particularly interested in security tokens, which represent ownership in real-world assets like stocks or real estate. And the platform provides infrastructure for issuing and trading these tokens in a compliant manner. Let's check out the non-technical guide to security tokens on the LCX website. It says, securities are financial instruments that hold a monetary value based on the asset it relates to. They include stocks, options, bonds, exchange-traded funds or ETFs, real estate investments, and index funds. It says that investors buy securities for two reasons. Either they want the value of the asset to increase, or they're interested in dividend payouts, interest, appreciated sale at maturity, or voting rights, something BlackRock does a lot of. And LCX has something called an STO, which is a security token offering, a big thing back in 2018, which have two key attributes, which are fungibility and negotiability. Fungible assets will help simplify the exchange and trade processes as they're interchangeable with other individual goods and assets, having equal value and are the same type. But why tokenize? They say that security tokens are highly similar to traditional securities. However, with one key difference, the tokenization of these assets. This technological upgrade made possible by blockchain technology can dramatically improve the dynamics of the traditional securities, bringing outdated infrastructure this industry runs on to the next level. They list the benefits of tokenized securities, including programmability, like automated dividend payouts, and integrated voting, increased transferability, interoperability of unrelated securities, 24/7 securities trading, cost reduction, fractionalization, a boost in the global investor pool, instead of securities being limited to its own country stock exchange, and finally, immutable transparency. It says right on the website that they want to bring the 2017 ICO buzz in crypto to these new STOs, and that's why I want to put LCX on your radar. The security tokens are offered to investors through the LCX platform, and upon successful investment, tokens are distributed to investors' wallets, representing their ownership in the underlying asset. Once the offering is complete, security tokens can be traded on the LCX exchange, providing liquidity and potentially increasing their value. And on LCX, all secondary trading activities remain compliant with securities regulations. If you want to talk STOs with other members of the Bit Squad, make sure you click the link in the description and join the Discord if you haven't already done so. When RWAs take over, tokenized assets are going to be revolutionary, and it looks like they're finding innovative paths to regulation, which could mean that buying securities on-chain could be a lot closer than we all think. But that's all I got. Be blessed. Good boy out.